Gold and silver prices not starting the week off on a positive note. Gold at a 4-week low and silver prices fresh off their second consecutive weekly decline. Joining me today is Vince Lanci, founder of Echo Bay Partners and also a contributor for MarketSlant.com. Vince, welcome back.
Thank you for having me, Danielle.
So Vince, let's start with silver here, trading around 16 and a half here. You have loved the metal for so long, and yet you now say what was good for silver going up might be bad news for it coming down. Explain.
At the beginning of the year, I was looking for silver to outperform gold in a rally. And it did do that, and I was correct. And in my own hubris, didn't really look at the reason why that was happening. I just thought there would be a narrowing of the basis between the metals. But in the sell-off, as everyone will note, especially people like Bubba, who took the opposite side of that bet and were right, silver got hammered compared to gold. Even in gold's bounce, silver lagged. So I had to ask myself why, and the answer was pretty obvious, and I should have seen it before. Silver's performing, its industrial aspect is really what's weighing it down. When you look at it compared to other more base metals, but still base in a sense, iron ore, copper, all those metals are down, and silver has suffered because of it.
But Vince, let me ask you, at 1650, you would think people would be scooping up silver here.
Yeah, I did, and then it went to 1750 on the bounce, and I thought I was smart, but now it's back to 1650, and as an investment, I'm happy, but as a trade, silver's not a buy here. That's not to say it's a sale. Silver is where it should be. And when you look at it compared to the other metals that are purely base and have no precious aspect to them, silver has held its own.
Okay.
Very well,
well, let me ask you this. Could we be setting ourselves up for a 2015 style event? We're coming into the slow summer months and mints have small inventory positions on hand. So perhaps a drop in prices may re-engage the retail buyer, and we could see, the current physical supply quickly disappear?
Investor demand has been choppy. What you're describing, I think, is what's happening in the macro spot on, in the sense that instead of people buying silver because it's strong, there are people investing in silver because it's weak. So it's becoming more and more of a dollar cost averaging asset, especially out of China. But the problem that's keeping silver down, whether real or imagined, is the perception that industrial demand is going to continue to slack off as the economies do. So it's an economic issue right now, not so much an investor issue.
Got it. Let's switch gears here. Talk gold. The hawk talk by Dudley earlier this morning, not helping the metal. Bonds down, stocks are down, the dollar up was the response. Right. What can we expect from this Fed speak week here?
Well, Dudley came out hawkish, saying things that were, in my opinion, contradictory, but it doesn't really matter. Basically, they're saying we're going to continue to raise rates despite what you think, whoever you are. And we're going to stay on a tightening situation, probably because they want bullets in their pocket. The only thing left to talk down in this world is the stock market. So they will continue to raise rates until the stock market comes off, right, and then you'll see easing again.
But there's a lot of people that think that they might just tighten into a recession here.
Those people are probably right. If you look at the bond yield curve, the short-term rates versus the long-term rates are becoming flatter and flatter. Short story is, at a flat yield curve, banks don't want to lend money, and if they don't want to lend money because there's no money in it for them, then what you have is a stagnant economy. A flat yield curve means stagnation.
All right, Vince Lanci, thanks so much for joining us with your thoughts today.
Thanks for having me. Take care.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.